Okay. So we are told here, Riziki Limited is considering a project with the following details. So we have initial capital. If I'm the one doing this, we have initial capital, ladies and gentlemen. We have initial capital. We have initial capital. We have initial capital of 40 million. We have residual value of 2.5 million, selling price there of 1.1. We have variable cost of 500, and then we have fixed cost per year of 5 million. Additional information, annual number of units sold are 30,000. Annual number of units sold are 30,000. If I'm the one doing this, I'll come, I can't pick this 30,000 from here the way it is. So if I'm the one doing this, I will come right away to where we have this. I'll just transfer 30,000, put it there. The project has a useful life for 5 years, so put this 5 as well there, so that I can use it. And then we have the company has a WACC of 12. So this is very important for me for purposes of what here? For purposes of discounting. So then they want me to compute the base net present value. They want me to compute the base net present value, base net present value. So base net present value, if you remember, this is that net present value that we get, ladies and gentlemen, by using the information that is currently available without altering anything. Without altering anything. We are not going to alter anything. If you look at part B, carry out a sensitivity analysis of NPV, assuming adverse variance of 5% for all the inputs except project life and WACs. You see here now they want us to change these things. So for the first one, I'm going to use, ladies and gentlemen, this information the way it is to get net present value. If you remember, net present value, you can only get net present value if you are using the cash flow model. You must first of all calculate cash flow. How do we get cash flows? First of all, by predicting or rather ascertaining profits. If you remember, ladies and gentlemen, if you remember here, there is a very important formula that I must always remind you guys, that anytime you want to get profit, in this kind of a situation, you'll be taking, if you remember very well, you'll be taking the price given, you subtract what we call variable cost. Whatever answer you get, you'll come and multiply this with who? With quantity, and then you subtract what we call fixed cost. If you're writing your notes, this is a very, very important formula. Very important formula amongst all the formulas. Whenever you see price and the variable cost, like now here we have selling price of 1,100. We have variable cost. We have variable cost of 500. We have the quantity sold of 30,000. So in this case here, when you multiply this minus this, which gives us contribution margin, I need to come and multiply this with the quantity to get total contribution. And then I subtract who? I subtract profit. Or rather I subtract fixed cost to get profit. So ladies and gentlemen, then this is a fairly straightforward question. Fairly straightforward question. So what I need to do, I can come and add like 10 rows in between here. I can add like 10 rows in between here. I hope we know the shortcut of adding a row. I told you, you simply press to add a row, to add a new row. To add a new row, we use this control plus shift, control and shift, control and shift, control and shift, control and shift. And then of course you press what there? You press equals. You press equals like that. Control and shift. You're holding both of them. You're holding on both of them at the same time. You're holding on both of them as it's at the same time. And then you say equals. Now listen, ladies and gentlemen, please listen here. If, for example, I would want you to be very keen here. If, for example, you want to add a row before required, You want to add a row between 16 and 17. You want to add a row. What do? You'll come to this 17, you click it, you highlight the whole of 17, and then you press Control Shift. I'm holding on both of them, and then I say equals. Of course, I'm adding. It's the plus that I'm after. When I say Shift, there is equal and there is plus. So when I say Shift, I'm going to plus straight away. I'm going to plus straight away. Is there somebody who has been able to add a row there? Is there anybody who has been able to add a row there? Is there anybody who has been able to add a new row? But if I want to add a row between 18, for example, if I want to add a row between 18 and 17, it's very easy. Control Shift, and then in this case here I say plus. I wish somebody who has been able to do this can be able to get the dance floor there and the dance. I like students who dance whenever they understand these concepts. Dancing is what I like. I should be able to know how to subtract a row and how to add a row, how to subtract a row and how to add a row. I should be able to know how to do that. That's very important for me. That's very important for me. That's very important for me. Great, great. Now please listen and listen to me very well. Once then you have known how to add a row, to add many of them at the same time is very easy. What you need to do, for example, if you want to add more rows here, you can simply come and there, say Control Shift, and then you keep on adding that plus, plus, plus. You keep on just saying, while holding on to Control Shift, so you add many of them. You add many of them. You can add many of them as much as you wish. You can add many of them as much as you wish. So I've been able to create some space here. So then what I need to do, ladies and gentlemen, is to come and start with the first thing. I've said I need the price. I need the price. So then I say tab. So the price given here in this question, the price given is you can see the selling price here is 1100. Please do this thing manually. Don't even start, for example, picking the figure into here. No, just type there 1100. It's good that way. Type 1100 there, type 1100. And then you say enter, it comes here. The next thing I need is the variable cost. I'm following this formula. So I'll come and write here, variable cost. I'll come and write here, variable cost. I say tab. So then I'm having there 500. Ladies and gentlemen, after that, I would want to get this contribution margin. So I'll be able to say enter, and then I say contribution margin. So how do I get contribution margin, somebody? How do I get contribution margin, somebody? Please talk to me. Talk to me tonight. How do I get contribution margin? Is there somebody who knows the formula for getting contribution margin? How do I get contribution margin? Thank you so much. They're telling me Mwalimu. Simply come and say tab there. So, and then you say equals. You pick the selling price minus the variable cost. Selling price minus the variable cost. Enter. Now, I've been able to get, ladies and gentlemen, the contribution margin. Contribution margin is the same as contribution per unit. Once I get contribution per unit, then of course I'm in need of total contribution. So I'll come and write here total contribution. So we have here total contribution. And how do we get this total contribution? We shall take CM times who? CM times quantity. CM times quantity. Contribution margin that you have just obtained here times quantity. Now, ladies and gentlemen, I would want to go back a little bit here. And add a row. I want to add a new row. So I'll say Control Shift, I say add. So I want to add a row. I just want to insert quantity here. I want to insert quantity. The quantity has been provided somewhere. This quantity annual number of units sold is 30,000. So in this case here, we have 30,000. Quantity is 30,000. You simply write there 30,000 so that now you can come here and then you get the total contribution by saying equals. You pick, in this case here, the contribution per unit that you have, and then you say times, in this case here, the quantity that is there. You're simply progressing. You're simply progressing. So come here and say enter. So when you say enter, ladies and gentlemen, you are able to see something interesting there. Now you have what we call total contribution. So then what do you think shall I do to be able to get a profit? To be able to get profit, I need to come and remove fixed cost. So I need to come here and type fixed cost here. Fixed cost here. So fixed cost is given. Fixed cost is given as 5 million, but please don't pick it directly. I want you to learn this thing the very normal, ordinary way. So come and tell us this is 5 million. 5 million. So 5 million. Just type it yourself. Type it like that. So once you have that, then you should be able to come and now tell us the last thing there, which is profit. Profit. So profit, if you say tab there, you know that profit equals, you'll pick in this case here, this total contribution. You subtract, ladies and gentlemen, no, this is wrong. You subtract in this case here that fixed cost. And of course, I've seen fixed cost is wrong. There's no problem. I'll come back here and I'll be able to delete 10. I'll come back there. I'll be able to make this cell live and then I delete 10 like that. I'll be able to get my profit of 13 million. So I want to know, first of all, whether there is anybody who has been able to reach where I've reached. Please feel free to ask questions. I will not, first of all, take the screen down. You can even screenshot it. You can even screenshot the question. You can screenshot the question before I pull it down. Before I pull it down. So they have been able, ladies and gentlemen, in this case here to take a screenshot. And now I'm going through any questions that I can see from my students, of which I'm not seeing any. I'm not seeing any. Of which I'm not seeing any so far. I'm so sure there must be somebody who is fearing to ask a question. Okay, let me just paraphrase this. Are we comfortable now up to where Mwalimu has reached? All of us, are we able to get this profit of 13 million? All of us. Lynette says yes. Yes. And we're not using any shortcut. I don't want my students to be using shortcuts. This semester, no shortcuts. Let's go the long way. Thank you. There is a question being asked there. There is a question being asked there. Just a minute. Okay. Okay, so remember, now here we have been able to get the profit, this profit of 13 million. And because the question did not give us, tax, when tax is not given, then automatically depreciation is what? Is irrelevant. Depreciation is irrelevant. What I was told in those old days, when depreciation, or rather when tax is not given, the profit that you have automatically becomes your cash flow. This is what you shall use to discount. And in my cash flow statement that I'm doing here, I know that this 13 million is an annuity. How do I know it's an annuity? It's because these 30,000 units that I used here, they're annual. We shall be selling 30,000 units every year. Annual number of units are sold 30,000. Look at even the fixed cost per year. Once you start seeing those figures, then you know that you are dealing with an annuity. So to simplify this, To simplify this, what I'm supposed to do is just to come and repeat this 13 million. So I've got year 1 to year 5. So I've got here my 13 million that I'll come and write. I'm writing these things physically. Don't even go for a shortcut. Don't go for a shortcut. Don't go for a shortcut. So in this case here we have, don't go for a shortcut. So in this case here we have, ladies and gentlemen, 13 what year? We have our 13 million. 13 million, because you see, 13 million, ladies and gentlemen, 13 million is what we shall be enjoying, is what we shall be enjoying for how many years, is what we shall be enjoying for how many years, is what we shall be enjoying for how many years, for 5 years. You can come and drag this, but for you, you just use the longer way first. Use the longer way. Every year we are enjoying that 13 million. Use the longer way. Every year I'll be teaching you the shortcuts, but for now, every year I'm enjoying 13 million. Every year I'm enjoying this 13 million. But when it comes to year number 5, I must put equals because I'm going to add 2 things. There's a function I'm going to use. So I'll say equals. I pick this 13 million. I pick the 13 million. Year 5 is the terminal year. I pick this 13 million, and then I say plus the residual value, the scrap value. So plus the scrap value, and the scrap value has been provided here. The scrap value has been provided in this question. It is here, residual value is 2.5 million. So go back here, residual value, you add here. It is 2,500, like that. You say enter, typo, whatever, no typos. So 15.5, like that. Now we are in a very good position of computing now the net present value. Now we have our cash flows here. So then how do we get our net present value? I'll write it here first, and then I'll come and use the net present value function. So I'll come and say equals net present value, and then I say, I can double click on this blue, but tab is the best. Tab is that function there that has got 2 arrows on top of your caps lock. There is a tab function which has got arrows facing against each other, like that. Then from there, I have the rate. So the rate, ladies and gentlemen, what rate do we have? I'll come and pick the rate. Fortunately, I have it here. It was written inside here, but because I would want to use it in my formula, I transferred and put it here. So the rate is 12%. Great, I've been able to pick the rate. Then I come down here. I come down here. So here, after that, I'm saying comma because I'm following this. Value 1 to value 5. Highlight all of them. The first cash flow to the 5th cash flow. You close your bracket. So when you do like that, you'll be able to get the total present value. But you see, I want net present value. So how do I get net present value? I'll come and say minus, I say minus the initial outlay. Do we have the initial outlay? Oh, yes. You can either copy it directly from here or you type. Actually, you can even type. So in this case, you'll come and put like that, and then you say enter. You say enter like that. You can see I'm able to get now my net present value. My net present value. So are you guys able to get this figure really? Are you guys now able to get this figure? Are we able to get this figure, all of us? Are we able to get this figure, all of us? Are we able to get this figure, all of us? Are we able to get this figure, all of us? They're saying yes, which is very good. They're saying yes, which is very good. Very good, very good, very good. That's very good. Now, ladies and gentlemen, from there, they want me to come and do the second part of the question. So the second part of the question, they want me, ladies and gentlemen, to carry out a sensitivity analysis of NPV, assuming an adverse variance of 5% for all the inputs except project life and WACC. What do we know about sensitivity analysis? What do we know about sensitivity analysis? Sensitivity analysis, we vary, we change variables over a model one at a time, and then you observe the impact of that change on that variable on the net present value. So anytime they talk about sensitivity analysis, we vary under sensitivity analysis. Under sensitivity analysis, we vary one variable at a time, one variable at a time. You know, we have got two types of changes you can do. We have what we call scenario analysis, where you vary all variables at the same time. But sensitivity analysis, you vary how many variables at a time? And then you observe the change. You observe the change. Now listen. So I'll come back here. 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 I will come back here. So remember now, whatever we have here, whatever information we had here is what we call the base. This information is the base because it's the information we've been able to use without changing anything. And then now I'll come and do my first scenario. You see, they've told us that all these variables are changing except WACC and number of years, but every other variable is changing. So we shall start with price. So we are doing a sensitivity analysis of 5%. Sensitivity analysis, 5%. And remember, sensitivity analysis, we are looking at adverse variation. So for price, if you are affected adversely, what does it mean? For price, if we are affected adversely, what does it mean? Does it mean that the price will increase or the price will come down? If you're affected adversely, what does it mean? The price will reduce. As a businessman, when my price reduces, that's an adverse effect. Thank you very much. So in this case here, they have told us to carry out a 5% adverse. Let me just come back to this question. You see what we're talking about. Carry out a sensitivity analysis of NPV, assuming an adverse variance of 5% for all the inputs except project life and W. So then I will start with the first variable here, which is price. So reduce the price by 5%. So I'll come here. I'll come here. I'll come here, and then I say reduce price by 5%, like that. So the first thing that I'll do is to come and copy my base. You copy your base up to this profit. You copy your base up to the profit, so Control C. And then you come and put your cursor here. You right click. And then you are copying the function with the formulas. You are copy. Don't copy like this paste 1, 2, 3 numbers alone value. No, I'm copying this with formulas. So I copy like that. Now, once I copy, I know that in sensitivity analysis, every other thing else is going to remain the same. The only thing that is going to change is this price, which is reduced by 5%. So then I'll come and put my cursor on this 1100. And once I know that in sensitivity analysis, every other thing else is going to remain the same. The only thing that is going to change is this price, which is reduced by 5%. So then I'll come and put my cursor on this 1100. And once I'm here, I would want this 1100 to come back live, so that I can make some adjustment. So how do I make these things live? I'll come and press F2. Once I press F2, because I would want a formula, then I have to go back and say equals to start with. And I continue my journey. If the price is being reduced by 5%, then the new price will be at 95%. So I need to come and say times here, 0.95. And then I say enter. I have my new profit here. I have my new profit. So I simply need to come and change the cash flows. Of course, I can copy. I'm very good in Excel. I can copy the formulas, but I don't want to copy these formulas. I've realized this from the little research I've done. People in this case here who pass this paper easily are people who go with some kind of foolishness to these exams. I'm sorry to use that term, but that's what I've discovered. All right, those many formulas really, they are not the best. So like now here, I know the profit is here. This is my profit. I'll come here and put this in like that. It's easy to read. So then I have here 11,350. 11,350,000. So we have again 11,350,000. I'll enjoy it. It's an annuity. So I'm enjoying here 11,350,000. 11,350,000. But the last year, things are going to happen. Can somebody tell me on the fifth year, what do you expect? On the fifth year, what do you expect? Can somebody tell me what is going to happen on the fifth year? See, this is wrong. So that's good to use differentiators here. So I'll bring this figure to life by saying F2. I delete 1 0 like that, 11,350. What do you think is going to happen on the last year? On the last year, I must say equals. I'm going to enjoy this 11,350. I'm going to enjoy this 11,350,000. But remember, there is a scrap value, so plus, there is a 250,000, 2.5 million actually, 2.5 million actually, like that, 2.5 million actually. Great, like that. Typo, say correct for you. So it gives me this, 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 it gives me that. So ladies and gentlemen, is there anybody who has been able to really reach where I have reached? Anybody who has been able to reach, like getting these cash flows here? So then once I get these cash flows, to get NPV is very easy. I'll come and say equals. I'm looking for the NPV functionality. I can see it is there. So the rate still remains at 12%. It is here because I'm following this formula. The rate is 12%. And then I say, comma, ladies and gentlemen, from there, values 1 to value 5. These are the values. So I'll come and pick them. And of course, after you've picked all the values, you say close bracket, and then you say minus what here, somebody? Minus the initial outlay. And the initial cost has been given. The initial cost, if I remember very well, the initial cost was this 40 million. The initial cost was this 40 million. The initial cost was this 40 million, like that. So you are able to get your net present value if we reduce the price by 5%. So is there somebody who has been able to get this net present value really? Is there anybody who has been able to get net present value? Net present value, net present value. Anybody who has been able to get the net present value? Is there anybody who has been able to get the net present value? Anybody who has been able to get the net present value of 2.3 million? We check. I'll repeat yes. Repeat from year 5. I'll repeat yes. Candy has gotten it. I will repeat. Sensitivity analysis, we vary one at a time. Yeah, variables change at a time, one at a time. Thank you so much. So there are students who are saying, Mwalimu, repeat how we reduced the price. So how do we reduce the price? Thank you for asking that question. Remember, we simply come under, we came here in and reduced this price here. You see, the price was 1,100, but now they've told us that the price is being reduced by 5%. So how do we reduce it? The formula is here. We take the older price times 0.95. Once we get a new price, because I'd copied the formula, everything adjusts itself automatically. Till where? Till here. So for you to understand, please allow me to pick another variable. Now I'm through with this price. Now can somebody tell me, this variable cost, I would want to vary it. I would want its sensitivity analysis. So could you kindly tell me, what do you think is going to be done with this variable cost if it's going to be affected adversely? If the variable cost will be affected adversely, what do you think will happen to it? What do you think will happen to it? Yeah, costs. When costs are affected adversely, of course, they increase. So I'm going to multiply this figure that we have here, 500, with 1.05, with 1.05, because it's going to increase by 5%. So then the first thing I will do, I will come and copy the base. I'll come and copy the base. So you'll come and say here, variable cost, increase variable cost, increase variable costs by 5%, like that. So what you do, you copy the base up to the profit, copy the base up to the profit. So you say Control C, and then you come and place here. You right click. You are copying the formulas, figures and formulas, like that. Now, having copied that, can somebody advise me? What do you think am I going to do there next? Can somebody advise me? What do you think am I going to do here next? What do you think am I going to do next? Remember, I haven't yet done what the title is telling me there. I haven't yet done what the title is telling me there. I hope you guys are able to hear Mwalimu. I hope you guys are able to hear Mwalimu very well. Yeah, I can see now they're chatting there. Thank you very much. Find the new variable cost. Marion, you are a great student. You're a great student, Marion. I'm telling you, Marion, were it not that this date is quite on a very, very sad corner, I would have straight away given you some 2,000 bob, Marion. Because what Marion is telling me is that, Mwalimu, all these things will remain as they were in the base period. But variable cost is the one that is going to change. And I can see my variable cost is this 500. So I'll put this cursor of mine on this 500 and then I bring back the 500 to live. So I say F2 like that. So of course I can go ahead and then I increase this by saying times 1.05. But you see, if you say just times 1.05, this thing will not bring itself up. You must go back and say what here? You must go back and say equals. I must go back there and say equals. And then I should be able to say now what here. Once I say enter, every other thing changes now automatically. So I have a new cash flow profit there. So now I'll be able to come here and write. I would want to know this one in terms of, all right, if I say like that, all right. So it is 12,250, 12,250,000. So when I come here, I'm just doing this thing in the most way in terms of my mother tongue. I don't want any shortcut, no shortcut. So I'm just typing because I even realize these guys give you a lot of time, really. You don't need any shortcuts here. So every year, because it's an annuity, I'm enjoying this. It's an annuity. I'm enjoying this. It's an annuity. I'm enjoying this 12 or 250, 1,000. So 12, 250, 1,000. We have here equals 12, 250, 1,000. But now remember here, there is a scrap coming because there's a last year. So you say plus, there is a scrap coming. Just go back and look for it. Go back and look for this scrap. So the scrap, ladies and gentlemen, what do we have here for the scrap? The scrap is 2.5 million. This one here. Scrap is 2.5, that one there. So you simply say enter. Typo correct for me, no worries. So then I have this as my cash flow. So I can easily now come and say equals. So I say I want to get net present value. It is there. So rate, I know the rate. I can go and get this rate pretty first. So pretty fast, I can know the rate is 12%. Then I say comma. After that, it wants me to give it value 1 to value 5. So I'll come and take this like that. I'm able to move to there. And then of course, having taken all the values, I simply to come and say close bracket. I say minus the initial outlay. Look for the initial outlay somewhere. Look for the initial outlay somewhere. Initial outlay is 40. Initial outlay is 40, like that. So you enter. So I'm getting 5.5 million as the NPV. Is there anybody who has been able to get this? Is there anybody who has been able to get this 5.57? Anybody who has been able to get this 5.57? Is there anybody who has been able to get this 5.57? Great. These guys are moving on very well. Got it. Got it. Great. Great. Thank you very much. Now let me ask you a question. Let me ask you a question. Let me ask you a question. Let me ask you guys a question. Let me ask you guys a question. If you're following, what do you think will be the next thing to be done? Are we done with this question? Let me go back here. What do you think would be the next thing to be done? What do you think would be the next thing to be done? I'm through with, if I come back to this table of mine, I've been able to make an adjustment to price, variable cost. Of course, this is a formula thing. Quantity, what have they told us about quantity? Yeah, quantity. Now this time round, it is quantity that is to be varied. I would want to give you 3 minutes. You try varying this quantity. Try varying this quantity. We see whether you'll be able to get it right. And I'm giving you exactly 5 minutes. You try varying the quantity. We see whether there is anybody who will be able to get this right. What we have done is to look at another variable called quantity. So this quantity, of course, quantity would want to sell millions and millions of units. So if you're told that quantity has been affected by 5% adversely, it means that we reduce the quantity by 5%. So this is what I want to do here. This is what I want to do. I would want to reduce it by what here? By 5%. So it means that first of all, I come and copy what here? I copy the base information. And then I go to the quantity, this quantity here, just reduce quantity alone by 5%. So take the old quantity, which was 30,000 times 95%. That's how I was able to get this. So I got this 12.1 million. Then I came and I took this as my cash flow. Cash flow is an annuity. Cash flow year 1, 12, year 2, year 3, year 4. But remember the last year, you'll take the 12.1 plus, ladies and gentlemen, in this case here, plus, ladies and gentlemen, this scrap value. The scrap value will be released to me. And then I was able to come and apply the formula to give me this net present value like that. Now, again, be a little bit slow here. The next one, after quantity, of course, I can't get this fixed cost. Fixed cost. Is fixed cost going to change? Let's see what they have told us will not change. Yes, it will change. Because remember, they have told us it's only WSCC, a number of years that will not change. So fixed cost is the last one here. It's an expense. An expense, when it is varied adversely, it means it increases. So come and increase the fixed cost for us. And please, if possible, give me an answer. Let's see whether somebody has been able to let's see whether somebody has been able to do what here. Let's see whether somebody has been able to do this sensitivity of fixed cost. Fixed cost. Let's see. Sensitivity of fixed cost. Okay, so we are increasing this fixed cost by 5%. So basically what I've done here, I came here, let me just repeat this very first. So basically what I've done here, I came first of all and took the base figures, I took them up, Control C. Then I came and pasted them here. Right click, this formula. And then now, because I'm only changing fixed cost by 5%, I came to this 5 million, the fixed cost figure, all right? Made it live by saying F2. Then I said I'm increasing this by 5%, so times 1.05, times 1.05. Of course, it can't go anywhere if I don't say equals here. If I try to say enter, look at what will happen. If I say enter, it will just remain like that. To evaluate it, you must come and tell us equals. Come and tell us equals there, like that. So we have enter like that. We have enter. That's the enter. That is the enter. So then I'm getting this profit like that. So I need to come and duplicate them here. So year 1, I duplicate the same. So I come to year 4. Year 4. So year 4, I have 12,750,000. But year 5, you see, I will get these 12,750,000. This 12,750,000, but I add the scrap. That scrap is not changing. The scrap is not changing. The scrap is not changing. So I'll come and say here, plus the scrap of 2.5 million. So after that, come here right away and give us our NPV. So you say equals NPV, equals NPV. So the rate is 12%. The rate is somewhere here. The rate is 12%. The rate is 12%. Okay, so that is it. And then I come back to my formula. Comma, values 1 to value 5. I pick this. After that, ladies and gentlemen, I close and then I say minus. I remember that initial outlay was 40 million, although there's no harm. I can come just back here and pick it at 40 million. This was the initial outlay. And then I should be able to pick it from there. I say enter. So I'm getting this 7.3. Is that everything? Most of the students who are doing this question ended here. But remember, they wanted all variables to change except two. The variables these guys gave you, we have this variable here. We have the variables here. We have these variables here. Initial capital. We have residual. So we haven't yet changed this. So we must change the initial what here? Capital. Let's change the initial capital. So come here. So initial cost, initial capital is a cost. If it is changing, it has to increase. Very many. So come here and increase. Initial cost by 5%. So abracadabra. So first of all, you copy what? Yes, somebody go to the base. Go to the base and pick it. Go to the base and pick it. Up to profit. So the base here. So control shift down arrow, control copy. Then you move back here to this initial cost. Put it here. Again, if I'm the one doing this, I could actually come here. If I'm the one doing this, I know there is residual value. So what are we going to do to residual value if residual value is affected negatively? If you know residual value, it's a cash receivable. So if it's affected adversely, then it's going to reduce. So reduce. Reduce what here? Reduce a scrap. Reduce scrap by 5%. Great. So control, I'm just picking this. I'll get back here to the base. Control C. We come back to this. Right click like that. Ladies and gentlemen, once I've done that, then I'll remember here I was required to do what here? Here I was required, ladies and gentlemen. Here I was required. Here I was required to do something great. The second most here, I was required to increase the initial cost by 5%. So initial cost, I know where it is. I've got no problem with it. I've got no problem with it. What I'll do, I'll simply come here, ladies and gentlemen. I will simply come here. I'll not affect this number. I'll simply come and say new initial cost. New initial cost to avoid the issues because that number is linked up somewhere. So a new initial cost will be equal to the old cost times 1.05 times 1.05 like that, which is very good. So now after I get this figure, then I should be able to now use it. I should be able to use it very well. So I'll come, ladies and gentlemen, here. I am here. So here I know there is nothing I'm going to change because the initial cost is not being featured anywhere in getting there. In getting in this case here, the what here? In getting the cash flow. So here increase initial cost by 5%. Initial cost will only affect me when I'm saying minus initial outlay. So when I come here, I can see my figures here are 13 million. So I'll be able to copy this 13 million throughout. So we have here 13 million. We have here 13 million. We have here 13 We have 13. We have the last year. Now you have to be very careful. It is this 13. You can say equals there. You take 13 million. You add the scrap. The scrap is not changing. So you add the scrap. So the scrap is 2.5 million. The scrap is 2.5 million, like that. So come to the NPV. So the NPV, what do we have here for the NPV, ladies and gentlemen? You'll come and say equals. You say NPV. You take the rate. The rate is this 12%. It is here. The rate is 12%. And then you say comma, values. So now come and pick the values, the cash flows, I mean. Pick the cash flows. At times the Excel misbehaves. You can simply come there and then you copy all the cash flows that you would want to pick. After that, simply close brackets. So after closing brackets, then what do you have? You'll come and say minus the initial outlay. So what is the initial outlay? It is the new initial outlay because this time around we're doing sensitivity of the initial outlay. So say enter like that. Is there anybody who was able to get this 6280? Let me see. Is there anybody who was able to get that 6280? Is there anybody who was able to get that 6280? No. Oh, great. So then we come and reduce scrap by 5%. Thank you very much. Thank you very much. Thank you very much. So now we are reducing scrap. You know, you don't have scrap value among us this. Simply go to where you are able to see scrap value. Simply go to where you are able to see scrap value. This is the one. Just give me the new scrap value. New scrap value. So new scrap value. So new scrap value, what do we have? So I will take the old scrap value, but because scrap value, remember scrap value is a benefit to us. So I need to come and reduce this by multiplying this by what when it's adversely affected, it is reduced. So multiply this by 0.95 like that. So you're able to get that figure, and this figure is very important to us. This figure is very important. We shall use it. So then come here. All the other things like in this table now are remaining the same. All the other things are remaining the same. So basically, here I will come and pick this 13 million. I can even copy this. I can even copy this the other side, but no shortcuts really. So we have here 13 million. We have 13, 1, 2, 3, 1, 2, 3. We have 13, 1, 2, 3, 1, 2. We have 13, 1, 2, 3, 1, 2, 3. But when you come to the last year, now we have 13, 1, 2, 3, 1, 2, 3. But remember this one, you must make it live and ensure that you add, you're adding here the new scrap value. You're adding the new scrap value like this. All right, so you can say enter there. And then of course you get something that doesn't make sense at all. So here we are. It never picked. So let me pick this. It's supposed to be equals here. And then you say plus. When I'm here, I should be able to pick the scrap value. This is the one that I want to pick there. You say enter, then I should be able to get the new figure. So when I come here, I'll be able to say equals. I say it's NPV that I need. Then I pick this NPV. I say the rate. Where is the rate? The rate is here. The 12%, remember. The rate is a 12%, remember. Here, 12%, comma. Then they want me to come and pick all the cash flows, really. They want me to come here and pick all of them. Pick all the cash flows. We now have the cash flows. We pick them here up to this one. You close. And then when I say minus initial outlay, which outlay am I going to subtract? Can somebody answer that question? Which outlay am I going to subtract? Let me just be silent a little bit, and then you guys school me up. Which outlay am I going to use in this? Should I pick this 40 million or 42 million? Should I pick the very old? Or should I, in this case here, pick 42 million? You're right. If I'm doing scrap value, sensitivity, it means that the initial cost will remain the 40. So here I have to go back to the base. 40 million, and then you say enter. So is there anybody who was able to get this 8209? Anybody who was able to get this 8209? Is there anybody who was able to get this 8209? Opposite of adverse variance, Miriam, is favorable, but we don't do sensitivity analysis. Favorable sensitivity, always sensitivity analysis is for adverse. Thank you. Great. So then I would want us now to draw a graph. I would want us to draw a graph, and this graph, I would want us to pick it from the solution. Just to show you how to do it, I just want you to pick it from the solution, this solution here. Let me rub this, which was drawn by the examiner. Or I can just draw mine by the side. So you see now, he has all these, he has all these from base up to residual value, that 82. So to draw a graph is very easy. I would want you to copy this. You copy this the way it is, like that, and then you come and highlight the two. So you go down like that. Once you are there, then you should be able to insert. You insert a chart, and basically you go for this. Insert a chart. Any 2-column chart like that. Then here I am. This is what the examiner. These are the examiner wanted you to do. Control Z. So that's what the examiner wanted you to do. You can see he has the same here. He has the same here. Okay. Sorry. Okay. I'll repeat again, don't worry. So are you able to see, first of all, are you able to see my screen? Are you able to see now my new screen? Are you able to see my new screen? Are you able to see my new screen? Are you able to see my new screen? Great. So then what you are supposed to do is to copy these scenarios. You have them base, 5% initial like that. And then what you do, you will simply come and highlight these two. Just highlight them. Control Shift, right arrow, down arrow. You highlight those two. And then you come and say insert. You insert a graph. This graph. You pick any 2-dimensional. So you can see I have it here. So what I need to do is simply to come and carry the whole of this. Carry it. Carry the whole of this to wherever you want to take it. Carry the whole of it to wherever you want to take it. Just carry it. So now you have it here, net present value. It will give you everything. It will give you everything like that. Now, ladies and gentlemen, this paper may have cheated students that it was an easy paper, but if you ask me, it wasn't that easy. What most of you did was scenario analysis. Most of you changed all those things, all of them at once in an exam. In an exam, that is what you guys did. I'm 100% sure, yes. I'll repeat, yes. On the graph, okay, I'll repeat, yes. How to drag down, which figures did you highlight? Okay, great. So I remember what I did. I'm repeating now. You see what I did? You must come and prepare a summary. You must come here and prepare what here? You prepare a summary. All those figures we have. So you see, we have here a scenario. We had the base NPV like that. We had 5% increase in initial capital. We had that figure. So you must prepare this summary. After you prepare the summary, highlight the entire table normally, just the entire table normally. You highlight the entire table normally. And then you go to insert, this insert. You insert under the data here. You'll see graphs here, insert. So that one here. Don't pick 3D, just take a simple graph, 2D. It'll give you everything, and now you can drag it. To drag it, you'll simply move around until you get this kind of a cross. Once you get that kind of a cross, you'll be able to write, or rather to hold on to your click, and then you can now move this thing the way you want. You can move it the way you want. You can move it the way you want, like that. So can you try at your own time? Is there any student who is joining us here for the very first time? Is there any student who is joining us for the very first time, who is seeing this Mwalimu for the very first time, and you saw Mwalimu in this case here eating meat? Very bad. Any student who is joining us for the very first time? Or this is the first time you're joining us. First time you're hearing. No guys, no new people. Great. So please do not hesitate. If you haven't yet joined us, don't hesitate. Please call us like today. First time for BDA. Call us today. We shall be able to guide you. Yes, and confused, okay? So 0719 525,000. I know why guys are confused. Number one, it's because you must have missed our first video where I was teaching how to discount. So once you get this video, then you should be able to watch this video. But before you watch this, you should be able to watch the video where we discussed how to do net present value. Great. And also, if you came late, of course, you must have really suffered, but we shall overcome. So, ladies and gentlemen, that is it. I would want to beg that you guys, all of you, of course, should be able to watch this video at your own time.